Hi, I'm J.R. Obrecht with Homestead Financial Mortgage.
Hi, I'm Cindy Quinn with Midwest Farm and Land.
We've got some questions to go over today, don't we?
Yes, we do. I've got clients that want answers. You've got answers?
I've got answers.
Okay. Big question. What's the difference between government loans and conventional loans?
Okay. So there are a lot of differences, a lot of similarities. Both are backed by the government, one explicitly, the other implicitly. Fannie and Freddie Mac have got the help of the government since we had the mortgage meltdown about 12 years ago. So there's that, but then there's government loans seem to have a very structured list of requirements. They also have some loose ends on their requirements, like credit score. They allow for a much higher debt ratio in most cases. If you've had a life event, maybe bankruptcy, foreclosure, it'll allow you to get back on that house buying train much quicker than conventional. Conventional can be much more rewarding once you get to the point where you have sometimes requires more down payment, not always. But if you have a higher credit score, less debt, and in most cases 5% down, with the 700 credit score is usually a better move to go conventional versus FHA. But like I say, people's always had life events. Maybe their credit struggled, they're 640, 620. That's an FHA client all day long. The goal would be to educate them and help them tweak a few things on their credit. And sometimes it's just getting a secured credit card and paying off a collection and giving it a little bit of time. And then all of a sudden we're doing a refinance, or if they want conventional, we can wait and do it then. But with rates being volatile, I think rates probably on their way up. It'd be best to get in whatever program you can now,
right, and
then get it figured out later. But government loans, Fannie and Freddie Mac, conventional loans, both great avenues, but like each client, what might be right for this client might be totally different for this client.
And that's why they just need to have a conversation with you.
Exactly. And sometimes with a volatile market, that line might be it might be very, very close, and even day to day. But for the most part, it's pretty evident when I talk to a client whether they're going to go conventional or FHA, and then we just start peeling off the layers of the onion and get down to the nitty gritty.
So basically, you answered my question: who qualifies for government loans? And FHA, everyone thinks that it's first-time home buyers, but if you've had an FHA loan in the past, that does not mean that you can't get a future one.
Multiple
correct?
Loans. Yeah, you can definitely have multiple FHA loans. You can have two at the same time actually, but that comes with another level of explanation. But yeah, you can go from one FHA loan, sell your house, buy a new one with another FHA loan. There are no reasons why you couldn't do multiple.
And I think that I have this right. Your favorite loan is the VA loan?
I love VA loans. Yeah, with our veterans, we try to do everything we can to push
Absolutely.
back. I compete with companies who have VA in the name or some level of relation to the military. So I joke all the time that we should have some sort of military affiliation because we do a very good job with our veterans. If they're a disabled veteran, then they don't pay any type of processing or underwriting or appraisal. And if they're in the military active and not disabled, then either one of those, they'd still get a free appraisal. We have no problem ever competing on pricing. We are very aggressive pricing when it comes to military. And, we have to be good. We have a big base here locally in the Metro East.
Absolutely.
That people commute from anywhere from 60 to 90 miles away. So we really have to be on our best gun. But, if I meet a realtor, when I met you, I think one of the things I mentioned to you is I really like VA.
Right.
Because I really like doing them. But it's, sometimes you can deliver with too many, hey, I do this.
Right.
But what do you really like to do? I like to do VA loans.
VA loans, yeah. VA veterans are always nice to work with too. They're one of my best clients too. Very, very, very good people.
So sometimes even veterans though will want to look at conventional loans as well, especially if they're coming from another home where they have a down payment and have that 700 credit score. But if you're disabled and have less than perfect credit, and even sometimes perfect credit, VA is just a great program. Glad to be able to offer it.
Can you have two VA loans at the same time?
You can.
Okay.
And there's a calculation of that based off of your certificate of eligibility, and that would be something we need to calculate. And it's not your typical calculations either.
Right.
As we go through this, I'm realizing that none of these calculations may make sense to the outside world. which is all the more reasons why my phone's always on. Give me a call or give you a call, and we can connect on a three-way call.
Okay.
And work through the needs of the client. But yeah, VA is an awesome program, but even a lot of veterans do conventional loans given their situation.
Right.
So it's good to look at all options.
Okay. So why is our interest rates going up and down on a daily basis, sometimes hourly, it seems like?
So it does go with the market. Okay, the Treasury, U.S. Treasury, or the 10-year bond or yield, also known, those do affect things. You know, as a mortgage banker, we hate to prey on bad news in the markets, but I'd be lying if I said I didn't get a little smirk when I, thought that the stock market had fell one day enough to drop rates so I could lock in some clients. You know, selfishly, but that's the truth. You know, when the market does go down, 10-year bond. Well, people sell stocks, they move their money into a safer haven like bonds, and the bond price goes down. Therefore, interest rates follow, and interest rates, come down too. So,
but there's no crystal ball.
There's no crystal ball. You just really go with the fact that rates are going to go up. Me and my mom have a lot of fun with it because she does stocks and I do home loans. So sometimes she has a good day, I have a bad day. So other way, it goes both ways.
But right now we've been pretty lucky.
We've been having some good days.
Good days, yeah. So what's the difference, since we're on interest rates, what's the difference between APR and interest rates? That's a big one. Like, people get confused about this.
Very confusing. And I love it when people say, hey, what's your APR? And I'm like, okay, well, it's probably going to be between, the last person gave me, it was 3%. Well, first of all, if your APR is 3% even, then you're paying probably no costs on your home loan. They're just not an even number. Most APR, if you're really getting down to the APR and you're getting a true answer, it's like 3.1125 or 2.6257. It's not an even eighth increments like your interest rate is. The difference between APR and interest rate is the costs that are built into the loan, and PMI is included into that. So if you think about a zero closing cost loan, your interest rates are going to match APR versus interest rates. If you have closing costs, then your APR is going to be a little higher than your interest rate. If you have a lot of closing costs, it's going to be way higher, right? And that's one of the things of that it is good to keep an eye on APR, but it's not the only thing to keep an eye on. You could actually buy your interest rate down. Say on a 15-year loan, your interest rate's 2.5%. You could buy it down to 2%.
Yeah.
It may cost you $5,000, and it may only drop your payment $70. So we'd have to divide out the $70 into the $5,000 and figure out how many months, 60, 70, 80 months it would take to break even, and then figure out if you're going to be in the house that long.
Right.
So to APR shop isn't always the end all, but we do filter that in with costs and how much time you're going to be in the home, and it's all the good things that we talk about when we're on an application of how long you're going to be here. We just got in talking about VA loans. A lot of veterans they come in, they move out, or they're on to their next stop, and they do want to come in and own a home. Well, they're only going to be in that home 3 to 5 years. Sometimes that buy down just doesn't even make sense. But the common person doesn't always know that, and if they're picking up the phone calling who's got the lowest APR, that's a call that I want to pick up because hey, my APR is 1.9.
Right.
Okay, what's your cost? Oh, now we're getting into the details. I love doing that because a lot of these online lenders, that's how they're getting to keep you
Absolutely.
on the phone. They have to be compelling. And it's not always to them about doing what's right to the client right now. We'll get to that, but we got to keep you on the phone right now. So that's quoting low interest rates sometimes. And we can do that. We can do those discounts, and we do those often. But I like dealing with the rule of thumb of a 5-year plan, 4 to 6 year plan. But everybody's got their own opinion, and some people, like I have been in my home for 15 years. I never would have thought it. But there are some people that know when they buy their home, they're going to be there till they die.
Right. Yes, I get that.
Those are the ones that I really do want to hone in on, and then really, talk about spending a little bit extra money to get you a better deal to save you long term.
So we kind of touched on closing costs, but what, I get people all the time, how much is closing cost, Cindy? How much is it going to cost me? And they vary. Mm-hmm. So can you explain, and can people take that and roll it into their loan?
So I want to hit two things here.
Okay.
So when people call me, buyers call me, and they found a home, right? And what's my closing cost?
Right.
The bank closing costs, your cash to close at closing, your appraisal? Like, what exactly are we talking? And most of the time they mean, what's my cash to buy this
Right,
house? Like,
yes.
am I
What
gonna
do I
need
have to
7
have?
grand, 10 grand, 3 grand? What is it going to be? So when that happens, we just really have to just dissect it down. And I pretty much say, okay, what do you mean by that? Because it can kind of mean two different things. But initially, your closing costs are any of your bank costs, appraisal, if there's any processing fee. If you want to buy the rate down, then there would be like a discount point or an origination. That would be an additional. And then you have your list of title costs and all the things that title do for us
Right.
to make sure that you're insuring a property with no liens, right? That you don't get in there and have found out that the previous seller did something to the neighbor, right? And there's a
Right.
mechanical lien. We want to make sure that we protect the client on that. So the title insurance is a big piece of that. And then the recording is a small piece of that, usually $100 to make sure that whatever mortgage we have then created is recorded with the county so that everybody knows it's your home.
Right.
And that they know that there's a loan on it, okay?
Right.
And they know that there's somebody they need to be sending a tax bill to, primarily. And then the other big thing is your escrow, putting in your taxes and insurance into your escrow. It's not really a cost per se, but we put it in the loan as a cost. But it's really going to be, in most cases, taken care of in your payment. But you've got to start somewhere. So
Does everybody have to escrow?
not everybody does. Most people do, and
Because it's
you get a
easy.
little bit better deal on the interest rate if you do.
Okay.
It's minor, but you have to usually have 20% equity and go conventional, or
Okay.
put 20% down before you get the choice.
Okay.
But escrow is one of those things where you have to pay for a year of insurance up front, but then next year it's paid for by your escrow. So yeah, it does seem like it's an extra cost, but insurance is one of those things that you pay for what you're going to be using it for the next year. It's not like owning a mortgage where you're paying for the interest from last month.
Right.
You really have to pay that up front.
Right.
And the seller owes you for the time in the home, and that comes as a credit. That's one of the things that we really try to hone in on, is to help them figure out what credits they're going to be getting from the seller. Okay, we're in September, then they're going to have 8 or 9 months, full months that the seller is going to owe them for 2021 or 2020.
Exactly.
And then that comes at a credit at closing. In the meantime, you usually have enough time to catch up your taxes and insurance, or your taxes for that year, just by paying your regular payment. So that oftentimes that comes as a credit toward closing costs. So closing costs is a very loose term. So when they ask what the closing costs off, I usually start with the bank cost, $1,000 or whatever they,
But every bank is going to be different,
every
right?
bank is going to be different, right?
And that's why it's just good to pick up the phone, call you, get some numbers straight from you instead of online and guessing
Right. And get a good idea what their cash to close is going to be, because a lot of times, even banks will overestimate that cash to close and deter a client from buying when they don't have all the figures. There's a tax credit that can come in at $1,500 or $2,000 and really change the dynamics of the loan, and they can buy now versus later.
Right. Well, here's another question. It's kind of off the financial end of it, kind of, but everybody always asks me, do we have to get an inspection? Does a bank want me to get an inspection? So what's the difference between an inspection and an appraisal? And let me just tell you, first of all, I always 100% recommend them getting inspections.
We do too, because we're not going through the home looking at it either. It's just another level of protection for the bank, really, but it is for the client too. Because
But you guys don't require it.
No, we do not require it, and we don't even typically get a copy of it.
Right.
So the difference between a home inspection is they're coming through and looking at the quality of the home that is being built, and any latent defects, any other defects that may not be latent. The leak in the attic, that's the latent one that you don't see, but you want to know that's there.
Yeah, and I'm not getting up there when I'm
No.
showing the house and the kids.
I'm not either. I don't even go in my own attic.
Right.
But so you want to get the whole home inspection, just so that you know all the ins and outs of the home, all the nooks and crannies have been looked at. They've went over with a fine-tooth comb. An appraisal, they're going to be coming there to make sure that the house meets an overall level of quality from the curb appeal, but they're not going to be, going into a crawl and looking at this and that. They may stick their camera in there and snap a picture.
Right.
If it's FHA, or in the attic, if it's FHA, but they're not going to be crawling around into the depths to find out all the, that there's bad wiring up there, or that you have a raccoon living up
Right.
in there.
It's so that's more value, what
Yeah.
the house is worth. But then whenever you do have the FHA and USDA VA appraisers, they go a little bit further in depth with their appraisal of opposed from a conventional loan, because they have standards that they have to
Right.
hold up with the government and what have you.
So conventional can be a little harder to get a loan sometime. They require a little bit more down, but they're so much easier on the collateral side, the appraisal, the condition of the home. With government loans, they often will catch chipped paint,
Absolutely.
missing handrails,
Yes. Cracked
notch in
windows.
in your sidewalk this much where something has sank or cracked.
Cracked
So
windows.
those are,
yeah.
if it's a hazard or could be a hazard that they see, that then they want to bring it up, and love them for that because that does keep quality of homes up, and there has to be a standard somewhere.
There does.
And-
There does. And let me just tell you, a good real estate agent will catch those things before you go into it, and we can ask the seller during negotiations even sometimes. Look, this is the type of loan we have, and we know that this is going to become a problem, so this is what we're asking for.
And when it does come up on inspection,
And it's done.
then
Yeah.
you guys can work it out. That's
Right.
another reason I like the inspection part too, is that when something
Absolutely.
does come up, it gives hope for negotiation. And there's no perfect house. Even brand new homes aren't perfect, but it creates a level of negotiation, like what you can deal with and what you can't, what needs to be fixed, what doesn't. And so I really like the home inspection for that second level of negotiation, if needed. It gives you an open forum to revisit things after you find out more about the home,
Right.
the skeletons in the closet.
I agree. And then it just makes the process go that much smoother.
Right.
For sure.
And the clients are then all in. They have a better understanding of the house. They've seen pictures. And most buyers know that there's no perfect home. They're going to be, believe it or not, think about the homes that we rented before we owned.
Oh,
right?
absolutely.
Like places that we rented, so people understand that, when you own a home, it's not going to be perfect. Neither was your apartment before that, or the
Right,
house. So
right.
I think it's just knowing is all the better, and that way, if it doesn't something that doesn't need to be done now, at least it may need to be done down the road. So the buyer can also be thinking about those things too.
Preparing. Absolutely. Well, thank you, JR.
Well, I appreciate it.
I think you've answered
This was
everything.
fun. Yeah.
Yes. We'll do it again.
All right.
I'll keep my questions coming. So if anybody has questions, let me know.
Well, I'm always happy to help. I enjoy doing it and love talking about it.